How can the principles of private equity, typically reserved for high-stakes financial markets, revolutionize the multifamily real estate sector? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy McKay. Let's get right to it. In the world of multifamily real estate, a new wave of leaders is emerging, blending traditional property management with the precision of private equity. One such leader is Karthik Kirupakaran, who is applying data-driven strategies to redefine multifamily operations. According to Carl Williams, who covered this story on November 4th, 2025, Kirupakaran is leveraging his extensive background in management information systems and business administration to bring a transformative approach to real estate. Kirupakaran's journey began with an impressive educational foundation, holding a master's degree in management information systems from the University of Illinois at Chicago and an MBA from Northwestern University's Kellogg School of Management. This academic background set the stage for a successful career in consulting and investment roles, where he honed his skills at prestigious firms like Vista Equity Partners and Alvarez & Marsal. During his time in consulting, Kirupakaran learned to think like an investor, understanding that every operational detail can significantly impact enterprise value. He now applies this investor mindset to multifamily real estate, introducing data intelligence, automation, and process standardization across thousands of residential units, primarily in Texas and the Sunbelt region. His efforts have resulted in double-digit growth in net operating income, reductions in delinquency, and improved resident satisfaction scores. Kirupakaran's leadership philosophy is built on three key pillars: transparency, automation, and adoption. Transparency fosters accountability, automation reduces redundant tasks, and adoption ensures technology serves its intended purpose. Technology should make the work easier, not louder, he emphasizes, highlighting the importance of focusing on outcomes rather than tools. Currently, as the CEO of Old 300 Capital, Kirupakaran continues to drive digital transformation in real estate. His firm, based in Austin, Texas, is notable for its vertically integrated property management approach, which has allowed him to recover over $150 million in asset value. His strategic vision includes recent acquisitions like the San Antonio River House Apartments and 1800 Broadway, which are set to thrive in San Antonio's competitive multifamily housing market. Kirupakaran's approach underscores a crucial shift in the multifamily sector, where operational precision is becoming as vital as acquisitions. Execution creates enterprise value, he asserts, a truth he's seen validated across various industries and now within real estate. Now, let's delve into a significant development in the multifamily sector, as covered by the Boston Real Estate Times on November 4th, 2025. Newmark Group Incorporated has successfully arranged a $600 million financing package for Boston-based West Shore, marking one of the largest multifamily transactions in the United States this year. This financing will be utilized to refinance over $250 million in existing debt across 5 stabilized assets located in Florida, Virginia, North Carolina, and Kentucky. Additionally, it will support the acquisition of 3 multifamily properties totaling 1,496 units in South Carolina, Ohio, and Florida. The transaction was orchestrated by Newmark Executive Vice Chairman Purvesh Gosalia and Transaction Manager Hayden Hedrick, with the deal closing within a swift 60-day period. The financing structure includes a $550 million senior mortgage and a $50 million mezzanine loan, both originated by Citi. This transaction represents the third largest multifamily deal in the U.S. for the year 2025, underscoring the robust demand for well-leased, institutionally managed multifamily properties, especially in high-growth and Sunbelt-adjacent markets. According to Purvesh Gosalia, this financing reflects the strong demand for well-leased, institutionally managed multifamily properties, particularly in high-growth and Sunbelt-adjacent markets. The borrower capitalized on a competitive debt environment to secure a low cost of capital, thereby generating liquidity to support further portfolio growth. This is an exciting time for West Shore, under the leadership of President Lee Rosenthal, as they continue to expand their footprint in the Sunbelt region, now managing over 18,500 units across 9 states. Lee Rosenthal remarked, closing a $600 million SASB as borrower and acquiring 3 multifamily assets in high-growth markets marks a pivotal moment in our expansion strategy. These strategic moves are strengthening West Shore's portfolio while continuing to invest in communities that promise long-term opportunity and resilience. The 8-property portfolio includes 3,241 units, with an impressive average occupancy rate of 93.4% and an average unit size of 1,014 square feet. The properties involved in the refinancing are located in Richmond, Virginia, Clearwater, Florida, Waxhaw, North Carolina, and Lexington, Kentucky, while the newly acquired communities are in Columbus, Ohio, North Augusta, South Carolina, and Palm Beach Gardens, Florida. Citi's James Goldberg led the capital markets team, pricing the transaction at the tightest levels achieved of any multifamily SASB so far this year, highlighting the ongoing strength of the commercial mortgage-backed securities market and investor appetite for high-quality, institutionally managed multifamily portfolios. According to Newmark Research, the United States multifamily investment volume reached $41 billion in the second quarter of 2025, a 15% increase from the previous quarter. This growth has been driven by easing interest rate volatility and a resurgence in institutional capital flows. The Sunbelt and Southeast regions remain key drivers of national rent growth and absorption, fueling portfolio-level activities like West Shore's latest expansion. It's a clear indication of the resilience and potential within the multifamily sector. In recent developments from River Falls, Wisconsin, as reported by Caitlin Doolittle on November 4, 2025, the River Falls Common Council has approved a significant plan for high-density multifamily housing. The approved general development plan for the Man Valley residential area includes 10 acres designated for multifamily housing on County Highway M at Discovery Drive. This development is set to feature 7 buildings with a total of 255 residential units, led by 360 Real Estate Solutions, LLC, in partnership with Sinair. The plan seeks flexibility in its development standards, including a reduced eastern setback for one of the buildings, adjustments in parking ratios to better align with expected resident numbers, and a revised open space requirement, acknowledging the site's proximity to public parks. Council member Nick Caro highlighted the importance of growth for community vitality, supporting the project as a responsible initiative. Cities that do not grow, die, Caro stated, emphasizing the necessity for growth mechanisms. However, not all council members were in agreement. Councilmember Sean Downing expressed concerns about the project's location and advocated for a focus on multiplexes to enhance rental opportunities. He voted against the plan, preferring a strategy that prioritizes rental availability in the area. Despite differing opinions, the council moved forward with the proposal, recognizing the need for density to achieve affordability and community growth. In other council actions, the planned unit development general development plan for Wildflower Meadows was tabled for further review. This development, consisting of a 93-lot subdivision with a mix of single-family and twin-home units, faced scrutiny over lot size reductions and its potential impact on community dynamics. Councilmember Todd Bierstedt supported the proposal, seeing it as a long-awaited opportunity to increase single-family home availability in River Falls. The council also approved several administrative measures, including a 5-year refuse and recycling contract with Waste Management and the adoption of the 2026 Fiscal Plan and Capital Improvement Plan. These decisions reflect a commitment to sustainable community development and fiscal responsibility. As we look to the future, these developments in River Falls underscore the ongoing balancing act between growth, affordability, and community identity. It's a dynamic that resonates across many communities, reminding us of the importance of strategic planning and community engagement in real estate development. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy McKay. See you on the next one.